We have a tweet here from, excuse me, at Dividend Grower. Should I purchase Qualcomm given the recent dip today? The company out with earnings after the closing bells. Some concerns that they expressed about China or lack of growth there, maybe.
Yeah, so I think that the news was that they are having difficulty collecting their revenues or their royalties from some of the Chinese producers. Look, we really like the semiconductor space. Qualcomm is not a stock that we own. We've been focused in Micron. We've been focused on NXPI, which is near field communications, and we've been focused in Intel, which is an out of consensus holding, but great dividend and good dividend growth.
And Intel's had a nice breakout lately.
It has, and if you take a look, like on a weekly chart or a monthly chart, it's extremely compelling. It's inexpensive, and I think it's more about free cash flow and dividend growth than anything else. It's not a rocket ship technology play. But anyway, on the Qualcomm, I think that this is probably a short-term blip. It's not broken all support, but certainly it's taken a hit today. And it's just what I would do is I'd watch to see over the next few days whether, in fact, it can get this thing swung around. We've seen over the last 18 months companies get hit a little bit, stock pulls back, and then turns around and rallies. Give it a couple days and see if that follows through.
There's a look at Qualcomm over the course of 10 years. How long have you held this thing?
We don't own it.
Now, have you ever held it?
We have owned it in the past.
Yeah.
We have owned it in the past, but it's not one that we own right now.
Price rise, thinking of Intel. I think we have a comparison chart coming here, just because over the course of 10 years, it's been fascinating to watch these two. And there's Intel really taking off. There's your stock.
Yeah. If you took a look at a weekly chart or a monthly chart, it would show that Intel really is starting to lift out of that base.
Right, and doing a bit of catch-up to Qualcomm. Qualcomm's coming the other way. Eric's in Cambridge. He's got a question for you about a pulp and paper company. Go ahead, Eric.
Can you give me your thoughts on Domtar? I know it's taken a pretty good hit. Is it a buy, or can you give me your thoughts? Thanks.
Eric, the only thing that I'll say on Domtar, because I haven't taken a close look at it recently, is that if something isn't rallying in the market we're in today, something's wrong. We've got a market where there's lots of winners. Now, I mentioned earlier that correlations stock to stock and sector to sector have been coming down. This is not a sector that's seeing a lot of new net buying. We watch breadth, and if breadth meaning the percentage of stocks within a sector or an asset class that are participating in strength, breadth really has not been expanding to the same degree as we're seeing in some of the leading sectors. I think that there's better things to do.
Where is your U.S. housing exposure?
We have virtually a zero weight in
Really?
U.S. housing.
And why is that?
Stocks are underperforming, both the suppliers in and the home building stocks themselves. I think a lot got built in, the expectation that off the bottom things got better, that it would keep getting better. Mortgage originations have been weak. Stocks are not performing. I think that, again, it's had a nice lift. It doesn't necessarily mean it's onward and upward from here.
Interesting. Dave's in Ottawa as we get back to energy. Hello, Dave.
Taking my call. I purchased Baytex Energy just under $40, and I wrote it up to over 48, and then took profit. And then when it pulled back to the $46 level, I rebought it, and now it's over 48 again. And I'm wondering if I should continue to hold it, or should I consider selling it, taking profit, and then redeploying the money into either a driller like Precision or Trinidad Drilling. Thank you.
Right. So this is a core holding for us. We often look for companies that are good getting better. I think that the acquisition they made earlier this year gives them great opportunity going forward. The numbers coming out of that acquisition look very, very good. So we think that it's relatively early days. It's one of about 20 holdings that we have in energy, so it's not like we've focused everything here. But I think that technically it's behaving extremely well. And once the numbers start to change for the better, they can change for the better for a while. So I think they've got a good opportunity.
You mentioned you hold about 20 energy type stocks. So what percentage, a third in terms of infrastructure income and producers?
Well, let me break them out a different way. So we have energy infrastructure, which would include things like Pembina, Keyera, AltaGas, and so on. We own growth producers, right? Like some of the U.S. producers that are growing 35, 40% a year.
The Matadors.
Yeah. We own energy companies that have very friendly dividend policies, okay? And that would include companies like Crescent Point, Whitecap, ARC, Torque.
Okay.
That's a third camp. We own some natural gas, and specifically because we don't think that the natural gas inventories are going to be rebuilt by the time winter comes, and we think there's potentially a squeeze. That's a smaller weight. So that would be a good cross-section. And then we own a couple of the big integrateds that have very balanced portfolios, like a CNQ or Suncor. So different camps, but it all adds up to about 40% of our weighting.
All right, interesting. And you're going to talk more about torque later on, and I think CNQ as well. We'll take a break here and come back with more of David Burrows and your questions.